This is an interesting article. I know it was from last week, but it still applies very much today. Today being December 14th, 2011, Wednesday. Talking about the sanctions to be imposed on Iran will push oil over $250. And that's not considering the closing the Straits of Hormuz or any kind of conflict, just sanctions alone. And this was coming off of Seeking Alpha, and I know sometimes the articles in here are not always perfect, but usually has some pretty good information, for the most part. Quite obviously, not everybody can win. That's just the way it goes. It's a gamble, and there's winners and losers, and the biggest winners are few, and they're the 1%. That's the way it works. But it's talking about sanctions on Iran can push oil up over 250%, and it goes on about I know Iran is one of the largest oil exporters in the world, fifth largest, and it says in here, it quotes a figure of Iranian oil is about 2.5 to 3 million barrels a day range as far as exports go, out of, well, I think it's 88 million barrels a day used worldwide, with about 40 million or so being those of daily exports from export countries. So Iran would be taking up, about 5% of the exports going on, which is quite a bit. And it talks about, when there's a percentage of demand or supply change, what the percentage change is in the price. So it says Iran exports are somewhere between 3 and 7% of the global market, depending on who you believe. And I know what they're saying, because I see so many figures, and not every number I get is, they should all agree with each other from all the sources, but they don't. I have seen this too many times, and I find it aggravating, but you get a ballpark idea of what's going on. We have a low estimate of elasticity in the short term of 0.2 or higher, and a more likely in the mid-range estimate of 0.5. A 1% increase in the price leads to a 0.02% decrease in consumption, or a 0.05 decrease in consumption. Or running it the other way, a 0.02% decrease or 2 basis points decrease in supply leads to a 1% rise in price. That's a hell of a big difference, and considering that Iran is probably roughly 4 or 5% of the global market, that could be a huge price move in the price of oil. So, I put my money down on this. So, I got out of it for just a little bit, or half of it, then I got back in it. Not as much as I was, because I don't like the fund, but I got some more silver. We're talking about a 3 to 7% decrease in supply, depending on what we're talking about, total supply or just export supply. And that's one thing to consider, but when you're talking about even a couple percent decrease in supply, you should see a hell of a big move in oil. So at one extreme, it's 350% increase of oil. At the other extreme is 60% increase of oil. So they're talking between $500 a barrel and $176 a barrel, $4.95 to $176 a barrel. That's why I think oil is going to be definitely $150 a barrel. But if they close the Straits of Hormuz, and I don't think it's going to be closed like permanently or anything like that, you can see it spike over 200. It's a guess. It's a guess. But it looks like it's going to jump up. Now, when oil usually is in a big bull market, you'll find the metals run high too, because there's uncertainty. The gold is going to run high, and the silver is going to run high. So that's when you probably see silver. If oil goes to like $200 a barrel, I would almost think that silver is going to fly up to like $90 an ounce or more, and it's going to be a panic, because too much uncertainty of what's going on. It goes, in short, a real blockade of Iranian exports would be so expensive to everybody in the world that no one is going to implement a proper blockade of Iranian oil. That's what they're claiming, but maybe not. But what's going to happen is, even if it's let me say this: there's going to be a black market for oil. They're going to get oil's still going to be sent to different countries, and it's Iran's oil is still going to get out on the market one way or another. But what's going to happen is it's going to cost a lot more. It's going to cost a lot more. That's what's going to happen. There's going to be more hands it's going through. It'll go to China, and China will resell it to Europe for all I know. And that's the game that they'll be playing. So I think it's going to go help a hell of a lot more in a short term just because of these sanctions. Now, I know the market traders and everybody, you know, I'm getting a little more attuned to this because it's all psychological, big time. You know, you talk about there's technical, there's fundamental, and there's psychological. If Bernanke says one word they don't like, they're all running for the doors, you know. If he says one thing that he liked, so, you know, next week it could be totally changed around. It's going all over the place. So I was curious about looking at, again, it's off of Net Danny. It only goes back about 6 months. I was looking at the gold priced in euros. Now, considering what do you get for interest rates? Basically nothing. Nothing. So, I mean, even if you bought gold back here for, you know, a little over 1,000 euros, it's still at 1,200 euros. You got almost a 20% gain since about June. You know, it ranges from, well, if you bought it at the low, a little over 1,000, but still close to a 15% gain, even with all the drop it had today. So, I mean, now if you go back a little further during the year, I mean, it was lower. It was lower. So, you know, I don't think people are dumping gold so much. I mean, this is all a psychological trader scare right now. And yeah, you should be, you know, when everybody's doing that, you should be dumping it too right here if you're in it electronically and buying it back cheaper. You know, that's the game you should be playing like everybody else is playing. But, you know, obviously, even if you held gold for 6 months, and that's done a long term, if you're going to hold the money in the bank, how are you doing better in the bank? You're not doing better in the bank. You're getting, you know, way over 5–10% interest here, easy, easy, and that's after it dropped off a lot and did a big correction. So, you know, quite obviously, what are people doing? They're holding on to their gold. They're not stupid. So, you know, I've been watching some of the news stories out there about gold being crashing down to you know, $1,500, $1,400 US. I don't think so. One little word the other way, and there's going to be a jump back in the markets. That's just how it's good. The game goes. It's all psychological. Looking at Gainesville coins, there's hardly nothing out there for sale. You know, I'm looking at the U.S. coins and the Canadian coins mainly, and I got some of these silver buffaloes too. And, you know, they're all right, but I was looking at the Eagles, and I don't know if I want to, well, I don't know. I mean, I already spent money on stuff, so I don't want to spend too much on physical. I just got a few ounces, and that was it. And mainly spent on the oil because I think the oil is going to go up, and I use double leverage, UCO. You know, I'm into fiat money too, right? I mean, there is some reality behind that. I mean, what do we spend? Fiat money? But I still think this is probably going to be long-term your best protection. Now, what I got was a few of these cougars. Not many. I just got 3. That was it. And because I'm getting sick of buying these things, and I'm nervous about holding too much of this garbage, too. That's another thing I don't like about it. Everything's got its advantages and disadvantages. So no matter what you look at it, you can get sunk one way or the other. But I did like these cougars, so I got a few of them. And I don't know, I might get some more. I mean, that depends. Depends. Now, if it does go down to some astronomically stupid low price like $26 spot, I will get more. I will. But I don't think it's going to happen. But I was wrong about it. I didn't think it was going to dip below 30, you know. Who the hell knows? This could be so short-lived. You know, I have no idea. Like I said, it's one word that makes the markets think everything's okay. They'll be flying back into this stuff, and the prices will jump back up again. So, but I do think another twist on this. I think that oil, gold, and silver, there is a correlation between them, especially when there's a bull market in oil. You're going to see the gold go up a lot because of uncertainty. And what's going to happen right after that, the silver's going to follow. So I think it's almost a given that what's going on with Iran, it doesn't matter if there's a war or not. Sanctions alone are going to push this oil up. Maybe it's not going to hit 2 or 250. I know I saw Alex Jones today talking about $300-400 a barrel. You know what? I've had $100 for every time that guy predicted something on his yellow journalism channel. You know, I'd have a lot of money because I mean, I see a lot of harebrained predictions from that guy, and I'm like, that's why I decided to just talk on this thing once in a while. I think it's reasonable to assume that fiat money and electronic markets are going to be around for a while. But I do agree with buying physical stuff because you don't know. You don't know 100%. These are very uncertain times. And does look like this oil bet is a good bet. You know, this guy in here says disclosures have no positions in any stocks mentioned. Well, I got UCO. And you know what? This is a dangerous fund because if oil just sits and goes flat, it jumps up like the 105, goes down to 95. Well, if I trade in and out of it all the time right like that, they'll still make money. And I'm probably going to do that because, you know, I bet a little too much on this Lindsey Williams clown, and I'm getting sick of this guy. I'm really finding out he's a bunch of BS himself, too, and I'm going by my own instincts completely. But I think UCO is a good bet right now. That's what I did. So, but it's a dangerous fund. You don't want to leave it in there too long. So I could see oil turning around easily with a couple words the wrong way. They do a military exercise in Straits of Hormuz. Everybody's be panicking. Oh, the oil's going up to $300 a barrel, and I'll be buying it. So that's probably when I'll dump some. That's the way I'm playing it. But no way in hell will you be making a bad bet if you were in euros and you bought gold 6 months ago at say 1080 euros, 1080 euros. So it's that 1200 euros right now. Big deal. So you're only up 12%. What would you be up in a bank? Nothing. So they're buying more gold. I guarantee it.